Today, we're going to explore an essential aspect of successful trading, creating a trading plan. A solid trading plan can help you navigate the markets more effectively, manage risks, and ultimately improve your results. Let's get started. So, what exactly is a trading plan? A trading plan is a documented set of rules and strategies that outline how you will approach the market. It includes your trading goals, the instruments you will trade, your risk tolerance, and the strategies you will use. Having a clear plan helps keep your emotions in check and ensures that you stick to your trading strategies. Now, why is having a trading plan considered a key factor in long-term success? These are a few reasons why. Discipline, goal setting, risk management, and adapting to markets. Discipline. A trading plan provides structure and helps you stay disciplined in the face of market fluctuations. Goal setting. It allows you to set clear goals and track your progress, whether that's a monetary goal or a percentage return. Risk management. Planning your risk is vital for long-term success. Your plan should detail how much of your capital you're willing to risk on each trade. Adapting to markets. A good trading plan can help you assess market conditions and adjust your strategies accordingly. Let's break down the key components of an effective trading plan. Trading goals. Begin by establishing clear objectives for your trading journey. Define what you want to achieve and in what time frame, while keeping in mind that trading markets involve both opportunities and risks. Market research and analysis. Utilize resources like Trading Central for in-depth market analysis. Understand which markets you will operate in, whether it's Forex, commodities, or stocks. Trading strategies. Document your trading strategies. Will you be day trading, swing trading, or scalping? Specify the techniques you plan to use. For example, you might rely on technical analysis or fundamental analysis. Risk management rules. Clearly outline your risk management strategies, including how much capital you're willing to risk per trade and your overall risk tolerance. Performance tracking. Include how you'll track your trades and analyze their performance over time. This often involves keeping a trading journal. Now let's discuss how to use Trading Central on Deriv Trader to create your trading plan. You can use Trading Central's features within Deriv Trader to gather real-time market data and insights, helping inform your decision-making process. The platform provides trading signals that can guide your entry and exit points, which you can integrate into your trading plan as potential opportunities. For tracking important market events, you can utilize Deriv's economic calendar, available at deriv.com/economic-calendar. This calendar helps you identify high-impact economic events that could affect your trading strategies. With the use of both Trading Central's analysis and the economic calendar's events incorporated into your planning, you can develop a more comprehensive trading approach. Lastly, remember that building your trading plan doesn't end here. It's essential to regularly review and adjust your plan based on performance and changing market conditions. Set reminders to review your plan monthly or quarterly. Assess which strategies are working and which need adjustment. Keep a trading journal where you can track your performance and analyze your trades. This continuous improvement can lead to greater success in your trading journey. And that's it. By following these guidelines and utilizing Trading Central's powerful tools, you can create a solid trading plan that sets you up for success. Get Trading Central on Deriv Trader now. If you found this video helpful, please give it a thumbs up, share it with your fellow traders, and don't forget to subscribe for more valuable trading insights. Until next time, happy trading.